All right, today we're diving into something that just doesn't seem to make sense. We've got a company, ecoWise Holdings, whose sales shot up by 12%. Sounds great, right? Well, somehow they still lost money. It's a real head-scratcher, a financial paradox, and we're going to break it all down.
So, yeah, that's the big question, isn't it? How on earth can your revenue grow that much and you still end up in the red? I mean, a double-digit jump in sales should be reason for celebration, but for ecoWise it wasn't. To figure this out, we first got to understand what exactly this company is all about.
Okay, so a quick bit of background. ecoWise is an environmental solutions company. Think renewable energy, resource recovery. Basically, they're in the business of turning waste into something valuable. You know, things like running biomass power plants, recycling stuff, even retrading old tires. It's a super important field right now, for sure.
And that right there brings us to the core of this puzzle, what I'm calling the ecoWise paradox. Because when you look at the big picture numbers for their second quarter, the top line, the sales, and the bottom line, the profit, or in this case loss, they just don't jive.
Just look at this. It's a tale of two completely different stories. On one hand, revenue is up a solid 12%, hitting over 9.4 million Singapore dollars. Awesome. But then you look to the other side, the net result, a loss. This is exactly what we're here to figure out.
And here's the number in black and white, or, well, red. A net loss of 147,000 Singapore dollars from their main business operations. Now, you could say, hey, that's an improvement from the $206,000 loss last year, and you'd be right. But let's be real. A smaller loss is still a loss, and that's just not the direction you expect to be heading when your sales are going up.
Okay, so to really get what went wrong, we've got to pop the hood and see what's happening inside. Let's dissect their performance. We're going to follow the money trail, from where it came in to, well, where it all went.
First off, this sales growth wasn't just a fluke in one area. Nope, both of their main divisions were pulling their weight. Resource recovery, that's the biggest slice of the pie, with stuff like recycling, that was up 13%. And their renewable energy side, up 9%. So the growth was real and it was happening across the board.
And this is where the plot really thickens, because there's more good news. Their gross profit margin, which is basically how much profit they make on the stuff they sell before paying for things like office staff and rent, that actually got way better. It jumped from 13% to 17%. So get this, they're selling more and they're making more money on each sale. This company was getting more efficient at its core job.
So that just begs the question, right? If sales are up and your profit margins are better, where in the world did all that money go? Well, the answer, my friends, is hiding in the operating costs.
And boom, here we have it. These are the culprits. Now, the cost of sales went up 6%. That's normal. You sell more, it costs more. But look at administrative expenses. A 32% surge. That's huge. And it was mostly because of higher manpower costs. This one line item, right here, just torpedoed the whole thing.
So, there you have it. That's the answer to our paradox. That massive spike in administrative costs didn't just eat up the extra profit, it completely erased it and then some. All those great gains from higher sales and better efficiency were just wiped out. It's like filling a bucket with a fire hose while there's a giant hole in the bottom.
But wait, the story doesn't stop there. Rising costs are only part of the picture. To really understand what's going on with ecoWise, you gotta dig into the fine print of their report. And trust me, there are some pretty big risks hiding there.
The first thing that jumps out is this big red flag called a qualified audit opinion. So what does that mean? Well, think of it like taking your car to the mechanic, and they say, look, most of it looks okay, but there are a couple of things under the hood I just couldn't get a good look at, so I can't give you the full thumbs up. It means the auditors found some problems they couldn't get comfortable with.
So what were these blind spots for the auditors? Well, for one, they couldn't get enough info on some subsidiaries in China that ecoWise had sold off. And second, they had some question marks about how the company valued a key financial asset. The bottom line here? These issues make it really tough to compare this year's numbers to last year's apples to apples. It kind of muddies the waters.
And you can see the actual quote from the auditor right here. When they say limitation of scope, that's professional jargon for we couldn't see everything we needed to see. And when an auditor says that, it naturally raises some questions about transparency, you know? It makes you ask, okay, what info was missing and why?
And if the audit issues weren't enough, there's a huge operational risk on the horizon. I mean, the clock is seriously ticking. The leases on their main facilities are up in early 2026, and the report says they're still looking for a new place.
That's a massive question mark hanging over the future of their day-to-day operations.
So you've got costs spiraling, you've got issues with the audit, and you've got a deadline to move out of your main facilities. That's a lot. So what's the game plan? Let's take a look at the road ahead and see what management says they're going to do about all this.
Okay, so management has a 3-point plan. Number 1, stabilize. That means go out and get more orders, lock down more business. Number 2, partner. Work with other companies to expand what they can offer. And number 3, innovate. Use tech to automate and improve how they do things, which hopefully could help get a handle on those crazy administrative costs we talked about. When you zoom out, the big picture is really a double-edged sword. On one side, the opportunity is massive, right? The whole world is moving towards sustainability and green energy, which is exactly what ecoWise does. That's a huge tailwind. But on the other side, the challenges are just as real. They're battling rising material costs, tough competition, and they've got this tire business that's just bleeding money.
So how does the company sum all this up? Well, their official outlook is cautiously optimistic. You hear that phrase a lot, and it perfectly sums up their situation. They're optimistic because they're in a great industry with a bright future, but they're cautious because, well, they know they have some serious fires to put out in their own backyard first.
And that really brings us full circle. ecoWise has these big, green ambitions in an industry that desperately needs them, but they're getting tripped up by some very old-school business problems, rising costs, and big operational risks. So the final question is, can they actually turn their green ambitions into, well, green, as in profit? Can they get their finances into the black? That's the paradox they still have to solve.